BlackRock, the world's largest asset management company, is increasingly making waves in the cryptocurrency space, particularly with Bitcoin. With an astounding $11.5 trillion in assets under management, BlackRock's influence in global financial markets is unparalleled. Traditionally, BlackRock has been known for creating innovative investment products and bringing them to the masses, most notably exchange-traded funds, or ETFs, in the public equities market. Now, BlackRock is venturing into the world of cryptocurrencies, with CEO Larry Fink showing growing interest in Bitcoin. During a recent appearance on CNBC, Fink discussed Bitcoin, public equities, and the role BlackRock could play in making these assets more accessible to retail and institutional investors alike. This signals a shift in how major financial players view digital currencies, particularly Bitcoin, which has gained significant legitimacy and momentum in recent years. Fink's mention of Bitcoin on such a high-profile platform underlines the changing sentiment towards cryptocurrencies within traditional finance. Once considered a fringe asset, Bitcoin is now being taken seriously by some of the largest financial institutions in the world, and BlackRock's interest suggests that cryptocurrency could soon be as commonplace in portfolios as stocks and bonds. This development marks a new phase in the integration of digital assets into mainstream finance, and it raises important questions about the future role of companies like BlackRock in shaping this emerging market. BlackRock has a long history of creating and expanding markets. One of its most notable achievements was the development of the mortgage-backed securities market, which transformed a relatively illiquid asset class into one of the largest and most liquid markets in the global financial system. Fink, who was instrumental in this transformation, highlighted that in the early days, there was little interest in mortgage-backed securities. But through persistent efforts, BlackRock was able to grow the market significantly. This is analogous to what BlackRock is now attempting to do with Bitcoin and other digital assets. Fink's remarks on CNBC suggest that BlackRock sees Bitcoin and cryptocurrencies as the next frontier for market creation. Just as the company helped to make mortgage-backed securities a staple of the global capital markets, it is now looking at how to broaden the cryptocurrency market. The firm aims to increase liquidity and transparency in the crypto space, thereby making it more accessible to a wider range of investors. This could lead to the creation of new products, such as ETFs or other investment vehicles that allow investors to gain exposure to Bitcoin without the need to hold the asset directly. As Fink pointed out, liquidity is key to any functioning market, and BlackRock's goal is to transform Bitcoin from a relatively illiquid and volatile asset into one that is easier to trade and invest in. This in turn could lead to broader adoption of Bitcoin and other cryptocurrencies, particularly among institutional investors who require higher levels of liquidity and transparency before they can commit large amounts of capital. Larry Fink's bullish outlook on Bitcoin is rooted in a broader belief that the future of financial markets lies in the tokenization of assets. Tokenization refers to the process of converting physical assets or rights into digital tokens that can be traded on a blockchain. Fink has stated that he believes the next generation of financial markets will be built on tokenized securities, and that this shift will bring about significant improvements in transparency, efficiency, and liquidity. One of the key benefits of tokenization is the use of distributed ledger technology, which allows for the real-time tracking of ownership and transactions. With tokenized assets, every beneficial owner and seller is known, and transactions are settled instantaneously. This level of transparency and efficiency is currently lacking in many traditional financial markets, where settlement times can take days and ownership information is often opaque. For Fink, the potential of tokenization goes beyond Bitcoin. He sees it as a transformative technology that could revolutionize the way all assets are traded and owned. However, Bitcoin plays a central role in this vision because it is the most well-known and widely adopted digital asset. By tokenizing securities and other financial instruments on a Bitcoin-backed blockchain or similar distributed ledger technology systems, Fink believes that BlackRock can help create a more efficient and transparent global financial system. Fink's bullishness on Bitcoin is also tied to his concerns about the growing US deficit. He has repeatedly warned that the current trajectory of US government spending is unsustainable and could have serious consequences for the economy. As of 2024, the US deficit stands at nearly $37 trillion, a staggering increase from the $8 trillion debt the country had accumulated by the end of 1999. Over the past 24 years, the US has added nearly $29 trillion in debt, and Fink believes this could eventually lead to economic instability. One of Fink's primary concerns is that the growing deficit will lead to higher interest rates, as the government will need to offer more attractive returns to finance its debt. This, in turn, could crowd out private sector investment, as businesses and individuals will find it more expensive to borrow money. Fink has argued that unless the US government takes steps to reduce the deficit and promote economic growth, the country could face a prolonged period of elevated interest rates and sluggish growth. In this context, Fink sees Bitcoin as a potential hedge against future economic instability. Unlike traditional currencies, which can be devalued through inflation, Bitcoin has a fixed supply, making it immune to the inflationary pressures that often accompany rising government debt. For investors looking to preserve their wealth in the face of a potential economic downturn, Bitcoin offers a unique store of value that is not tied to the actions of any central bank or government. One of the most compelling arguments for Bitcoin as a long-term store of value comes from Michael Saylor, the CEO of MicroStrategy and one of the most vocal advocates for Bitcoin. Saylor has argued that Bitcoin is superior to other traditional stores of value, such as gold, real estate, and fiat currencies, because it is immune to inflation and supply increases. Unlike gold, which can be mined, or real estate, which incurs maintenance and tax costs, Bitcoin has a fixed supply of 21 million coins, making it inherently scarce. Saylor explains that when the price of most assets increases, their supply typically increases as well. For example, if the price of a stock increases, the company can issue more shares. Similarly, if the price of gold increases, more gold can be mined, thereby increasing the supply and potentially lowering the price. Bitcoin, however, does not follow this pattern. No matter how much demand for Bitcoin increases, its supply remains fixed, making it a truly scarce asset. This scarcity makes Bitcoin an ideal store of value for investors looking to preserve their wealth over long periods of time. According to Saylor, Bitcoin is akin to concentrated digital energy, a form of wealth that cannot be diluted by inflation or government intervention. For individuals and institutions looking to protect their purchasing power in an uncertain economic environment, Bitcoin offers a unique solution that is not available with other assets. Cryptocurrency has also become a focal point in US politics, with both Democratic and Republican leaders beginning to engage with the technology in meaningful ways. One notable example is Kamala Harris, the US Vice President, who has received significant donations from Ripple Labs co-founder Chris Larsen in the form of XRP tokens. This marks one of the first times a major political figure has received campaign donations in cryptocurrency, and it highlights the growing role of digital assets in political fundraising. On the Republican side, former President Donald Trump has expressed support for Bitcoin, going so far as to propose the creation of a national Bitcoin stockpile if he is re-elected. Trump's proposal is aimed at ensuring that the US remains a leader in the global cryptocurrency market by holding a significant reserve of Bitcoin. This idea has gained some bipartisan support, with Democratic Congressman Ro Khanna of California also advocating for Bitcoin to be included as part of the Federal Reserve's reserve assets. Both Trump and Khanna see Bitcoin as a way for the US to maintain its financial dominance in the face of growing competition from other countries. By embracing Bitcoin and other cryptocurrencies, the US can position itself as a leader in the digital economy, attracting investment and innovation in this rapidly growing sector. Looking ahead, many experts predict that Bitcoin's price and influence will continue to grow in the coming years. Some forecasts suggest that Bitcoin could reach $100,000 or more by 2025, driven by increasing adoption from institutional investors, corporations, and even governments. As Bitcoin's network effect grows, its value is likely to rise, further cementing its role as a global store of value and an essential part of the financial system. Bitcoin's network effect refers to the idea that the more people who use and invest in Bitcoin, the more valuable it becomes. This is similar to how the internet and computers transformed society. As more people began using these technologies, their utility and value increased exponentially. Bitcoin is benefiting from a similar phenomenon, as its underlying technology, blockchain, enables it to spread rapidly across borders and industries. By 2025, Bitcoin could be an integral part of not just the financial sector, but also other industries such as real estate, supply chain management, and even healthcare. Its ability to facilitate secure, transparent, and instant transactions makes it an attractive solution for a wide range of applications. As more people and institutions recognize the potential of Bitcoin, its value and importance in the global economy are likely to increase. In conclusion, BlackRock's growing interest in Bitcoin and cryptocurrencies signals a major shift in how traditional financial institutions view digital assets. Larry Fink's bullish stance on Bitcoin and tokenization reflects a broader recognition that the financial world is changing rapidly, and that companies like BlackRock must adapt to stay ahead. With growing political support for cryptocurrency and increasing recognition of Bitcoin as a long-term store of value, the future looks bright for digital assets. Bitcoin's network effect, its potential to serve as a hedge against inflation, and its ability to transform markets through tokenization all point to a future where Bitcoin plays a central role in the global economy. As we move towards a more digital, interconnected world, Bitcoin is poised to become a cornerstone of financial systems, offering new opportunities for wealth generation and economic growth. BlackRock's involvement is just the beginning of what promises to be an exciting new chapter in the evolution of global finance.